Okay, so we have here some keywords, buzzwords, important words that bankers need to be aware of. Not only bankers, PSD3, PSR, FIDA, and yeah, maybe also talk a bit about SPAA. So let's kick things off with the PSR. Ralf, can you give us, not in a nutshell, but...
Okay, yeah, well, for PSR, 5 years ago when we got into PSD2, so there was, it was good for some countries and some TPPs, it was not so good for others. And we quickly developed some experience there on what to improve. So we were, I think, pushing a bit on the improving the regulation, revising PSD2 into PSD3. And we are quite happy with the fact that it is being split into a PSD3 and a PSR, so that there is a regulation that will apply the same to all countries and not just a directive. So that's good. There are a few other things which we think was very well done by the Commission in their proposal. But then we also have a long list of improvements and recommendations for improvements that we put forward to the Parliament, to the Council, in order to actually get most of all the lessons learned and all the money invested and the errors made and all that. So unfortunately, we have now seen developments on this, first by the Parliament, not really going much into our direction. They were actually more supportive of banks and their concerns. And now the Council, even worse, I must say. So it is very much a threat to TPPs in Europe, what they are currently proposing in their current draft. And so there are actually even existential issues that we now have to address. So we sort of have to forget our long list of improvements, and now we got to focus that we're not actually getting worse. So we are at great risk of getting worse with PSR, not better. That's very disappointing.
But on the other hand, to go a little on the positive side, we have the development of SPAA that wants to compensate for the TPPs, right? So Arturo,
Yeah, well, it is a positive to counterbalance, but it comes out of the necessity to do something positive out of PSD2. So SPAA was born as SEPA, API, and the EATPP. Maybe this doesn't sound politically correct, but I think most actors around PSD2 foresaw that PSD2 was not going to stand up to the expectations. So we started discussing about the possibility of having a scheme-based approach towards open banking with a fair distribution of value and risk, which is a politically correct way of saying with fees. So the outcome of that investigation phase was positive, and it was handed to the EPC to go into operational mode. And we now have, SPAA stands for SEPA Payment Account Access Scheme. It's now a live scheme with version 1.1 of the rulebook up there. We have 5 asset brokers already enrolled in the scheme, but we need somebody on the other side to be able to dance. So we're waiting for the first asset holders to join the scheme. Hopefully this will happen in 2025. And this will be very positive, not only because it would allow to fulfill the political aims of PSD2, although not in a regulatory fashion, although we have to comply with the legislation, so this does not bypass legislation, but it would allow both sides of the market to cooperate in a productive win-win situation. And beyond that, there will be functionality that goes well beyond what PSD2 encompassed. So we will be able to be competitive with account-to-account with the card world, including everything that you can do on a card-on-file basis. So I'm positive that the market will receive this well, and that we'll soon have asset holders on board and transactions will start flowing.
Yeah, and since you mentioned the market, how ready, how prepared are all parties to implement all these developments or these initiatives?
There is a lot to do. And obviously for the banks, and everyone is complaining about all the different regulations coming now in and all the work they have to do. And it's all done on more or less on a compliance side, which is part of the problem. Because it'll be done on we have to be compliant, so we do whatever we have to do, but there is no intention to do more. So things like SPAA or creating something that goes beyond the compliance side is very important. We have seen now what we can get for free, which is not good enough. It's by far not good enough, especially not for payments. So if you look from a PISP's perspective, in order to compete at what I call the holy grail of payments, which is retail payments. So that's where all the big players, the cards and the wallets from the east and west are competing. If we wanna compete with that high level, we need collaboration. So this cannot be done on forcing banks to do this or do that. It has to be based on collaboration and a win-win. And of course, there is money changing hands as well, which is why we are actually focusing on collaboration, not so much on regulation. We want less regulation, if anything. We want to have it better. Well, we want to have it better, of course, but overall less. There's far too much regulated, both for us and for banks.
What means better regulation? Sorry to interrupt.
Yeah, well, I mean, if I could say maybe one example, currently now very topical, which is about FIDA coming in, where the proposal is looking at giving customers the right to access their data, which is great. That's exactly what we need for all those companies or financial institutions which are not yet allowing customers to access the data in real time. They should be forced for 24/7 access, like a user interface. But that's it. Everything else, what the interaction between the data holder, the brokers, the data user, the TPPs, the banks, the insurances, all that does not have to be regulated. We can come together on a voluntary basis, and we need that voluntary basis because only then it's a win-win. That's exactly what we've done with SPAA. It's not mandated by law. It is something that we've come together with the banks to create something which is better than what we get by law.
Yeah. To take the ball in your court, is it because the laws are too prescriptive?
Well, that's one of the reasons. So I think legislation should be principles-based and results-oriented. That means it should be much less prescriptive. But even if you took for granted prescriptive legislation, at least it should be clear, which it isn't. You know, there's a term that's frequently used in Brussels, which is called creative ambiguity. So that would be the worst possible scenario, having extremely prescriptive legislation with too much ambiguity. So I think we're in the worst possible of worlds, and we should strive to be very clear what the aims of the legislation are and what the results should be. And we're not in that situation at this point in time. And if I may use PSD2 as an example, the political objectives were to foster innovation and competition with an adequate level of security. And I don't see any improvement in competition and innovation. Actually, I think there are less successful TPPs in Europe now than they were before PSD2. So in that regards, I think PSD2 will be a big failure. It has been successful in the security part, but that was subordinate to the two other objectives and not the other way around.
Yeah. But now to end up our discussion in a more positive way, if things turn out to the best for the consumer, how would this best case scenario look like? In how many years collaboration would start to work, a regulation would be implemented, and so the best case scenario?
Well, I think one of the most imminent regulation to come into force is instant payments. We haven't covered, and I think that is really, really good news for consumers and also for TPPs. Maybe not so much for banks, at least not for the half which didn't do it voluntarily and now have to do it by force, by law. But that's certainly a very, very good development from a consumer's perspective, also corporate's perspective, and a TPP's perspective, because it will give us back the payment certainty that we lost with the introduction of PSD2. Prior to PSD2, we had good means of how to make sure that an initiated payment is also getting executed. With PSD2, we lost that ability, which is a big, big loss. And now with instant payments, I think it's coming back because the payment guarantee basically comes intrinsically with the payment itself.
Yeah, and for you, Arturo? Best case scenario?
Well, 5 years, unfortunately, 5 years in the EU, it's a blink of an eye in terms of regulation. So, so I don't know, I'm not sure if there's much time for things changing significantly, but what I would hope for is less legislation and more principles-based, results-oriented legislation. So in this case, I sympathize a bit with the banks. So I won't name the bank, but at an EPC board meeting, I heard somebody say, it's when I talked to this particular bank about potentially joining SPAA, and he said, look, it's been many years since we can't do what we want. We have to spend all our budget in what we are forced to. So, and that's not good for anyone. And it's not good for the banks, but it's also not good for the consumers and for anybody else. So I hope this trend changes a little, and I think Draghi's report will probably have an effect and will start slowing down legislation and make it simpler.
Yeah, and more agile. And talking about positive things, how do you find the event so far?
Great. I think this is an outstanding event. I think it's unique. The venue it's incredible. And how many fintech events in the world do you have the opportunity to visit Count Dracula's castle, or to have a pianist perform on stage for the opening of the event? So it's an incredible event, and kudos to Sergio for organizing it.
Yeah, so he's a regular, but for me it's the first time, and I'm fascinated. Very, very nice place and great event.
Great. Thank you so much, and I look forward to future editions.